Hello, everyone. Happy Tuesday. Good morning, good morning, good morning. Last day of the month. April already gone. Where is time going? How is everyone doing? So sorry about yesterday. If you want to know, like, if I ever have to skip a live stream, please subscribe to my Twitter at MGArnold. At MGArnold. I posted it there. Sunday, the main breaker on the house, the 200 amp disconnect blew, and I reset it, and nope, reset it multiple times. Actually, before we moved in, it had blown multiple times, and it was sort of jerry rigged. So it finally died, which is really bad in Arizona because then you have no electricity. It means you have no ACs, and there's two AC units on this house. So with no power, and you know what? Had somebody come out on Sunday, but the parts supply houses are not open, so you can't get the 200 amp breaker. They don't sell those kind at Home Depot. And then there was only one we found in the valley for all the houses here, so that was fun on Monday. But power back up, everything restored. Sunday night really sucked because I stayed at the house with the dogs. My wife went to a hotel because the internet didn't work. So she had to prep for, she had a very early business meeting and she had to sleep and have internet. So we put her in a hotel and I stayed here in a very, very hot house with the dogs. But that's enough about me. Hope everyone had a wonderful weekend and a wonderful Monday. We are back for Tuesday. Sterling with the news. Thank you. And thank you for tuning back in. Wages and salaries increased 4.4%. Sterling, you've put in a lot of stuff. I'm just scrolling through here real quick. There isn't anything that shows disinflation or deflation. You know, stuff's still going up. McDonald's had earnings, barely beating on revenue. Did you have the quarter the sales comps on there? Benefit costs also rising. Good morning, Sterling. You know, stuff does not, and already, you know, if unemployment ticks above 4%, people are calling for the Fed to start cutting. You start cutting with these kind of numbers, it's going to get very, very stagflationary. Let's see. There, you put everything in. Thank you, Sterling. Employment costs 1.2% versus 1%. The yen falling and pulling back a bit after it really looked like yen intervention passing 160, and then the intervention, which only took it back to where it was on Friday. Oh boy. We have MMM. Yep, 3M reporting. You had Coke reporting. Thank you for putting in all the numbers. I don't even need to show up. We should just have the live stream with Sterling. Sterling, you should take over when I can't do it. Good morning, Patrick. PayPal, you had PayPal this morning. Good morning, McRangers. Good morning, Mark. Let's see. Good morning, Anissa. I gotta say good morning. That's more important than earnings. Good morning, Jacob. Walmart, I saw that they're going to close their 51 health clinics. What else? We have Lilly, to the moon and beyond. Lilly is still, after returning to the weekly rotation zone, still climbing higher. Good morning, Heinrich. Good morning, Eric. Good morning, John. Everybody tuning back in. Good morning, Richard. Good morning, Jake. Yeah, the only issue with renting is, but there's just not time to buy yet. It's just not time to buy yet. We'll see. But we had housing prices. That's a good transition. You had the house prices coming out month over month for February, up 0.9%, year over year, 7.3. I was looking at houses that, oh boy, I'm looking at houses. You know, the one that, I was looking at one that was bought. Did I say this last week on the live stream? What was bought last June for $849. They did minor updates like replace the appliances and some cosmetic stuff. Now they're asking 1.49. So 600,000 increase year over year for appliance update and some cosmetic stuff. It's absurd. It's absurd. Everybody thinks they got $1 million property. Everybody. So, if that's the case, then it's going to get real interesting real quick. But it will keep going till it doesn't. Just like a market, you're not going to trade the housing index. Like, you're not going to just go buy and sell houses willy-nilly. But, we're at I call it the overbought condition with momentum starting to stall out. Sterling already gave us the employment cost, benefits, wages. Again, these numbers are coming in hot. What happened to my red book? Where's my red book numbers? I don't see them. If somebody has those, could you put them in the chat? We got the Chicago PMI coming out 15 minutes after the cash open. Remember, I'm on Eastern time now for everybody. Even though I'm in Arizona, I'm on Eastern time because that's what people want to see. Consumer confidence, 30 minutes after the cash open. And then we got the Dallas Fed Services Index coming in at 10:30 Eastern. Yesterday, there wasn't much missed. Again, sorry I couldn't be here. Yesterday was the Dallas Fed Manufacturing Index, still in major contraction, even worse than expected. So far, you got Tesla after the pump from the Chinese self-driving stuff. Pulling back. You got McDonald's dropping after earnings. Amazon, remember, earnings after the close. AMD earnings after the close. So AMD and Amazon green. Lilly still chugging along. Still chugging. We got the groups. Let's see. Healthcare. Healthcare is the only thing really positive today. Industrials is pretty much flat. Basic materials, consumer, cyclical, and technology are all down. FedWatch tool still has the first cut potentially in September, barely. It's almost 43.8 to 42.4. And so if that flips, then your first cut isn't till November. So this is getting pushed out more and more. Fear and greed, almost back to neutral mode. All right, what have I missed here? Who else? Good morning, Legion Reaver. Hello, Charles. Oh, thank you. Red Book 5.3. Though that number coming in pretty decent. Oh, well, no, that Red Book. Okay, it's not out yet. That's a pretty decent number. So we had Lilly again, 3M, McDonald's, Coke, PayPal. Nothing's really going to rock the markets. Now, this is going to move the markets. AMD, because if they beat, you could get sympathy with the other chips. If they miss, you'll, again, sympathy to the up or downside, and especially Amazon, one of the massive mega caps, and that also, even though their data centers, their Amazon Web Services and everything rules the roost, it'll be interesting if you break out the retail segment to see if the how that is going. Tomorrow you got Pfizer, CVS, and MasterCard. And then after the close, you got Qualcomm. So, again, the big day, this is the second biggest day. I'd say the biggest day is, I'd almost go with this is the bigger day now because of where Apple is. But Apple, with the mega cap stance, is on Thursday. So don't forget that. Now we got to catch up. 5.5. Good morning, Chris. 5.5. Is that the official number now for Redbook? Because that's a pretty decent number. All right, what are we watching here? So, yesterday officially hit the 50% retracement bounce back from the sell-off. Now remember, anywhere between 51.4850 and 51.9474, I'm watching for the rollover. We just peaked in there. Again, this could stall out. It doesn't have to be a massive rollover, but unless we get a close above 51.95, let's just go 51.95, I'm still in neutral mode because we closed above the rotation zone on the daily, but not in bull mode. To regain bull mode on the daily, 51.94. Also, we've bounced off the bottom of the rotation zone. Last week it was up strongly. I'm watching for another setup and roll over, at least a 3-leg down on this. So this would be leg one. It would be a 3-leg total, an ABC pattern at a minimum. So this is the reaction to or B, and then I'll be watching for a C. However, if we close above that 51.95, could take us into potential double top territory. So that's why I'm watching. We have to let the setups unfold. Also, remember we have unemployment numbers on Friday, non-farm payrolls. We got non-farm payroll. So that's what I'm keeping an eye on. So I'm watching Monday's closing price very, very closely, because if we start breaking above about 51.50, 51.48 is the level I'm watching the open. Then I'm going to about 51. You got some minor resistance about 51.65. More significant to me is 51.75, and then there's not much until you get to that 51.95 area to the upside. Support. The key support level, we have a significant area right around 51.15. 51.15. If we start breaking below that, then I'll start watching for some other key pullback areas, which would be roughly right around 50.96 to 5100, and then 50.82, and then 50.59. And that's not just for today, that's for the next couple days. Good morning, Christoph. Thank you for tuning in. So that's what I'm watching for, but we're starting to round the top out. Now, it's all going to depend. I mean, we could be a little more back and forth today because we got Amazon after the close. But that's going to be a real deciding factor. And then if Amazon does beat, it's really what level it pops to. And keep in mind that 51.95, especially once futures reopen if there's an Amazon and AMD beat. NASDAQ, the key area, it's stalling out. There's some pretty significant resistance right around the 17,950. If we get through that, you're into a single bar clear path move to a major breakdown zone and a major harmonic cluster. 18,110 to 18,138. And you got the declining 4-hour 200. So that's the key area. If we start popping through this 17,950 area, my next target is until this 18,110 to 18,138. 18,110.50 on a closing basis. You close above there, then I'll be watching for a retest of the higher prices, and that could take us into potential double top. This would be one side of the top, even though it's a little sloppy, that created the little mini double. Then we'd be into a bigger double. Also, I forgot to mention, so this being the last day of the month, this is the first down month. There's no way this is going to recover. I mean, that would be mind-blowing if this red candle was erased. This would be the first down month since back in October. So we haven't had a down month since back in October on the S&P. If you look, the same thing on the NASDAQ. No down month since October. So this will be the first down month since October. All right. Let me get back to here. Short term, my major support level is coming in about 17,745 to 17,750. Drop below there. The key areas are right around 17,665, then 17,635. Major on any bigger pullback is going to be 17,531. Thank you again. So Charles and Sterling confirming Redbook was 5.5. Pretty decent number. I want to know how the spending's holding up. Do people have like a secret money tree that got released to certain people and is blooming right now? Because I didn't get my free money tree. The Dow, the breakout level is 38,585. The breakdown level, the one I'm really watching, is about 38,330. The key support is 38,132. Now, the Dow didn't hit the 50% level, so that's on any rally over the next couple days is 38,911 is the first key area that I'll be really watching for on any rally. The Russell, the good old Russell, which didn't hit the 50% either. Sorry, I forgot to, let me just redraw that in the Russell. So on any rally in the Russell over the next couple of days, 2039 roughly is the key level. And then it would be 2056. Now, on a pullback basis, I'm keeping a close eye right about 2000 for the breakdown play. Then the target comes to 1989. And then we have 1974. So the VIX dropping very rapidly out of fear mode, but still at a higher elevation. I'm now watching 1450. We get below 1450, especially with like an Amazon or AMD beat, I'll be watching for those double tops to potentially form. So, again, as to start getting into more significant sell-off, it's got to start getting back above about 1550. The DAX, look at this, stalling out at the 62.5, poking above, reversal close down, poking above, reversal close down. So far down on the day right there. No double, of course, but the key breakdown level is roughly 18K. 18K. So the DAX has not been able to get in a double top territory, but can't get any traction above that 18,375 area. The notes still pausing here after the big sell off at the 75% harmonic. We see the pause there. We start getting a notes close below 107.11. The target's 106.10.5. Let's look at that yield. The yield still holding the rotation zone. Watch, especially going into the end of the week for the possible breakout. We got those stagflationary numbers roughly out today. 4.07. If we start getting above 4.07 this week, then could make a quick trip to 4.859 to the top of the channel and the 87.5 harmonic. Good morning, Martinez. If the market pops post-market on earnings, like, do you still wait for a daily close above the 60? Well, if it starts popping and it looks like it's going to keep running, on a short-term basis, no. I'll want the follow-through close, of course, because you could get the next day intraday reversal, but you can easily play it higher in the short term. Just keep in mind that if it doesn't follow through with that 62.5 close, that's a very key thing for me. Then the probabilities have not shifted. And the fact that if it popped above, let's say something popped above, like, let's just go back to here. All right, let's say, this gaps up on a new open, gaps up above 51.95. Let's say both AMD and Amazon hypothetically beat earnings and people just rush in. All right, we got to buy it. It pops. Maybe we gap up when it reopens or something. Or even could, the futures are open 1 hour after cash, run that up there. But then I'd be watching tomorrow, especially if it runs up and then can't sustain a close above that. That is a very bearish potential reversal. So that following close is still going to be important, but it can be played on a short-term perspective from my level. But I would not carry. Again, let's say I was playing something on the short-term basis. All right, we're popping by that 51.95. I'm going with the momentum play, and then it reverses. I can't carry it. If I was trying to turn it into something longer, can't carry it forward. Can't carry it forward. Hope that helps. Dollar index still holding the rotation zone. This is why these simple concepts. Look at how many times it's rotated. It's still holding it. And look where the bottom rotation zone is. So think about this. If it closes back below about 105, just go with 105. You could pretty much see a quick trip back to that 50. All right. Other than that, 105.76. It closed back on Friday at 105.76 right there. Right there. I'm watching for this. Again, we're still in the bullish pattern, and this has been a flagging pullback in the rotation zone. Now, it's a great area. If this were to, from a bullish position on the dollar index, if it were to close below this low, not only would it be below a key little swing, it would also be below the rotation zone. In the short term, would I be looking for higher prices? No. In the short term, I'd watch for a more substantial pullback. Would that invalidate the overall bullish position? No. It would put a damper on it in the short term. But I'm really going to be watching how today, especially with these numbers coming out, again, a rotation back in the dollar index, but it has not been able to sustain anything yet. Crude just has not been able to get any traction, bouncing into that 50% area and then still no traction. But there's very key support about this upper 81s. 81.80 is very key support. But that's not a great play right there in crude from my perspective. Gold, which is finally today looking like we're going to get the down close in the double top that was confirmed but never triggered officially. We had up closes. And look at this. Look how well it's held the rotation zone on the closing basis. Remember, rotation zone, watch for the closing basis, which closed up today. So it would have to bounce back above about this 2330 area to get the close and still hold the rotation zone and leave a tail behind. And it would have to recover all the way above about 2340 to not trigger the double. Other than that, with that, I'd be watching for a slightly bigger pullback in gold. We'll see how today's a critical day in gold. Silver also breaking down, a weak bounce out of silver, and really going to be watching for a retest of this 25.90 to 26 area. Copper is this could be an outside key reversal day. Not quite to that X harmonic area, coming up to 4.69. I was watching this just above 4.7. This could be an outside key reversal, so watch where copper closes in relation to yesterday's open and low price. Other than that, copper's got a little overextended, but this could be a warning sign, but we'll watch for the secondary reaction, which means the next bounce up in copper, we'll be watching for a more substantial potential topping. Other than that, still in longer-term trailing. Remember, copper, I've been bullish on it for a while now, ever since it closed back above that 62.5. The Japanese, you're spiking above this 150. We got to the 160 area. Has anybody got confirmation that was, hold on one second, that was Bank of Japan? Have they confirmed that they intervened or yet? Because that was the speed of this. That is the kind of stuff that is traditionally intervention. But I haven't heard official. Now, this is going to be very short-lived. Pretty much on this wide range bar from the intervention, I am watching to see. Look at how that lines up with the prior harmonic area. Now you have the 62.5. A close above 158.10 roughly. That would be a very short-lived intervention success, because that could be a retest of that 160 area again. The euro still stalling out at the first target and just chopping back and forth. Not much to talk about there. Spiders. These Spideys. Let me flip this around real quick, because you can see here we've into that 50%. On the Spiders, the key level is 513.08 on the closing basis. That's the level for all you Spider traders. We're trading 508.51. So to this going into the open, so the upside target to me would be 510, roughly the gap fill, and then it's not till 513. Minor area will be about 510.95 to 511. The very key support is back at about 505.40. I'll be looking before that at yesterday's lows, 507.25. The Qs also. The Qs, which I'm still expecting a rollover. Now, what would invalidate me expecting a rollover would be a close above 4. Just go to 436. Roughly 430, 435.95 area. 436 right now, little gap down. So on any rally, the rally would take me to close of yesterday 432.75, and then it's at 435.95 to 436 area. Support, there's some area of significance at 431, and then we'd be looking at about 429. What is this? For the past year, we've averaged 10,000 people a day coming into the country, which translates into 3.65 million in the last 12 months. That will certainly give a boost to retail sales, well, especially since they're giving the money away. But the core Americans are hurting. Bitcoin, keep an eye on this for the Bitcoin. Still, it's confirmed this double, this lopsided double, but not triggered it. It still has to close below 67.71. Paying close attention to that, because if that triggers, you see where the targets are. Now look where the 200 is on the daily basis. All right. Now it's still against the weekly rotation zone, so you could get another bounce down close to that first target, but we'll be watching very close to see where that is today. Tesla on the Chinese pump yesterday. Now, remember, we don't have a time pattern yet, and we've recovered with the horrible earnings back to the weekly rotation zone and some major resistance. I'm still watching for some kind of play to set up another topping play. This has nothing to, this did not invalidate the short setups yet. But, as I said last week, there wasn't a topping play yet that I've seen. Based off this price action, I'll be paying close attention to yesterday's lows. NVIDIA, the key level, remember after hitting that first target, the key level is still 892.27 on a closing basis. So if AMD beats and NVIDIA pops, pay attention to 892.27, because that would then invalidate the remaining targets to the downside for that double. Speaking of AMD, yes, triggered a double bottom going into earnings. So that's going to be interesting. Double bottom triggered. And then the next key target beyond that for me, miners, 176.26, 186.47. If it were a miss, this low area is very key, 146.40. And then below that, if it were a miss, the key area I'd be watching on a drop would be 137.60 area with the 200 and these prior key swing lows. Amazon, we got going into the earnings. Open, and I have to leave. Actually, I have to take my wife to the airport, so I won't be around for the first little bit. She's flying back to Chicago today. Amazon, no up close. It was a down close. See, this was a reversal right below that 62.5. But on a pop-up, I'll be watching this key area, the 87.5, 186.84 to 189. If it were to do something crazy, this is where the reverse harmonics come in. Let's say there's a pretty substantial beat. I'd be looking at 195.63, and then the next major target is back to 200 to 201 area. Let's check in at the S&P for the open. Then I got to run. The S&P, the open, the key resistance it's got to get above is this 51.36. So that's going to be key on any rally. You see there's substantial buying pressure down here, but if it starts getting below 51.20, watch for the bigger pullback. Other than that, I'll be watching for choppier. And with the tick, that's a pretty decent negative opening. So I'm going to be watching how strong it is on the, I'll be looking at a couple things. Maybe I have to pull over while driving, or I'll get alerts. I'll be watching for the bounce on the tick and to see how high the S&P can really go. because this can bounce, and then the key thing is minus 400 on the tick. And if the S&P can't get really sustained above 5136 on that bounce, then I'll be watching for a bigger rollover and to see how these lows hold. All right, with that, I will see everyone tomorrow. Thank you. What's any thoughts on Michael's credit event thesis? Let's go and ask me about that tomorrow, Sterling. Ask me about that. And I didn't see all the comments. If you could get that over to me, I need to take a closer look at that, and we'll talk about it tomorrow. With that, thank you for tuning back in. Sorry I missed yesterday, but I should be around for the rest of the week. I'll talk to everyone later. Bye for now.